Hey guys, this is Thobela. Welcome to my YouTube channel and thank you so much for pressing that play button. Please continue supporting your girl, subscribe, share and comment. So today I want to ask you, do you currently have debt? Do you understand how the recent cuts in interest rates have affected your debt? Well, if you want to find out, please stay tuned into this video. That's what I'll be exploring today. As a disclaimer, guys, please remember my videos do not constitute financial advice. If you are looking for financial advice, please do consult a certified financial planner with the FSCA. And also these videos constitute my personal opinions and not of an entity or of anyone else. So guys, just housekeepings. I'm shooting outside today, so you'll be hearing a bit of traffic. But let's get right into the content of this video, which is just to focus on how the interest rate cuts have affected us as consumers and specifically, the debts that we have. So I thought I would focus on what has currently been happening in our markets, and I today want to focus on the interest rate cuts. So in the first quarter of this year, which starts on the 1st of January to the 31st of March, we've seen three different interest rate cuts from the Reserve Bank. What is the Reserve Bank? So the Reserve Bank in South Africa is the bank of banks. So we've seen them cut the repo rate three times to a total of 2.25%. So in the first 3 months of this year, the repo rate has gone down by 2.25%. Now, how does this affect us as consumers? Because this was especially an initiative to relieve the financial markets, to relieve corporate South Africa, but also to relieve us as consumers. And today I want to explore how we are relieved by the recent rate cuts. So the first interest rate cut came in January, and it was a 0.25% interest rate cut, also known as a 25 basis points cut. The second one came in March, and that was a 1% rate cut, also known as a 100 basis point interest rate cut. Now, if you remember, this came on the 19th of March, and at that time it was a couple of days after the president had come onto our screens and declared a state of national disaster, given that we were already dealing with the first cases of COVID-19. The third one came on the 14th of April, and South Africa at that time was already in lockdown. And this was a surprise interest rate cut because it did not come from the scheduled meetings that the Reserve Bank holds. So this was a surprise measure amongst the other measures that the Reserve Bank had put in place to relieve the economy. So I want to explore how this has relieved consumers like ourselves. But in order for us to understand that, we need to understand what the repo rate is. And the repo rate is the rate at which commercial banks borrow money from the Reserve Bank. So this is the rate at which the Reserve Bank lends money to commercial banks. Now, a decrease in the repo rate means that commercial banks can borrow money from the Reserve Bank cheaper, which then means that they can lend to us as their consumers at a cheaper rate too. Now, commercial banks use what is called the prime interest rate to start calculating the rate at which they're going to charge their clients. Now, please, it is important to note that this is a starting point at which commercial banks calculate the rates at which they lend to their clients. A lot goes into the interest rate that you pay to commercial banks, such as your credit rating, and a lot goes into your credit rating as well. So for now, we're just going to focus on the prime interest rate, which is what the commercial banks use as a starting point in calculating their clients' interest rate. So sometimes you'll find that they'll quote you an interest rate that says you're going to pay prime plus 1%, for example, or prime plus 2% in some of the debt instruments that are related to prime. How is prime linked to the repo rate? So prime is calculated by adding 3.5% into the repo rate. So currently the repo rate is sitting at 4.25%. It decreased from 6.5% by 2.25% to 4.25%. Now, if you take 4.25% plus 3.5%, you get 7.75%, and that is prime, and that is the starting rate for commercial banks in calculating interest rate to their clients. Now, if you have debt that is linked to prime, like a home loan, like a car finance, the interest rate in that debt should have gone down by the same amount as prime, because remember, when you calculate your prime, the 3.5% is fixed, but then the repo rate changes. So the interest rate that you are paying into this debt should have gone down by the same amount as prime, which is 2.25%. Now that we understand all of this, how has this interest rate cut relieved us as consumers? So I'm going to use two different consumers, and these consumers will all be paying a home loan, for example, just for simplicity's sake. So let's say that two of these consumers have the same amount of home loan. The one is paying a fixed amount into his or her home loan, and then the other one is paying whatever the bank is deeming redeemable at that time. So if you are paying a fixed amount towards your debt right now, the interest rate the interest rate that is calculated on your debt has gone down because the repo rate has gone down. So whatever interest that you are required to pay is now less, and that affects the total amount that you are required to pay on a monthly basis. So even that amount has gone down because the interest you are required to pay has gone down. So whatever that is remaining from that amount that they are paying goes towards tackling their actual debt, which means that it now reduces the term at which they are required to pay that debt. So they actually reduce the term of their debt. Now, the second person on this side is paying whatever that is required by the bank. So the bank calculates your interest rate now because everything has changed, and then your installment has now gone down, and then they deduct whatever that is required. Now you will find that actually at the end of the month you are left with some money in your bank account because you are paying less than what you paid previously. Now all of these people benefit in a similar way. So what this person can do, of course, there's a lot of things that this person can do. They can take the remaining amount and top it up into the same debt, attacking the actual loan itself and therefore reducing the term of their loan as well, like the other person that we've explored. Or they can use the remaining amount to relieve other spending that they need to be relieving, so such as essential spending that you require, or alternatively this person can be investing this amount of money in towards savings and investments. So this is how I understand how this interest rate cut that it relieved consumers out there. Please share with me how these three different rate cuts have relieved you or have relieved someone that you know. Please share with your family and friends to help them understand one of the ways the recent rate cuts was meant to relieve us as consumers. Please share topics onto my channel that we can explore. And also, just on a last note, it is very important that we understand our finances personally, but also we understand how they are affected by the current economic environment that we are currently navigating through. So I'm hoping to explore some of the things that are happening in the economy and linking back into each and every one of us personally, and how they are affecting all of us in our separate lives. But for now, that's all I have time for. Thank you so much, and please subscribe.